Syria in 1960. He got his MA in economics in 1963. He PhD in economics in 1969 from Pennsylvania University, USA. He received extensive teaching in fiqh muamalat and sharia from his late father, Sheikh Mustafa Ahmed Zarqa, a renowned sharia scholar. Dr. Zarqa worked with the State Planning Commission, Syria, from 1970 to 1976. He served King Abdulaziz University, Jeddah, Saudi Arabia, for 23 years, from 1977 to 2000, first as an associate and subsequently as a professor. He also worked with the International Investor Kuwait as an advisor and member of the Sharia group. Currently, he is senior advisor with Shura for Sharia Consultation Kuwait. Dr. Zarqa was awarded the Islamic Development Bank Prize in Islamic Economics in the year 1990. With this, I invite Dr. Zarqa to give his lecture.
Should I start with Bismillahirrahmanirrahim. Dear participants, Assalamu alaikum, rahmatullah. We have three topics. Let me start with the first. This matter of exchange contracts in Sharia when we apply them to shares of common stock. Notice that regarding this topic, there is one standard issued by the Accounting and Auditing Organization of Islamic Financial Institutions in Bahrain, which pertains to this particular topic. So we do want to basically address some issues which are contained in this standard. That standard is pretty long and complicated. We will not cover everything in the standard, but we will cover only certain aspects of it. There are some aspects of that standard which is in your hands. This is standard number 21 about financial papers. One aspect relates to topic number 1. The other aspect relates to the later topic in our presentation, cleansing of impure income. So regarding the first topic, we need to give you an introduction. You see, the standard tells you this is permissible, this is not, this is permissible, this is not. We want to see the logic behind the various prohibitions or permissions stated in the standard. And we picked this topic because it is still controversial from a fiqh point of view. That is, there are some significant differences of opinion about this topic among fiqh scholars. We hope that by looking at these standards also from economic point of view, we help formulate our own understanding. That is not only to know what Sharia scholars are doing, but also to understand and formulate our own convictions. All right, so let me go to the first topic. Shares of common stock. I will now talk about the nature of the share. Now, would you think that shares of common stock are commodities like any other? That is, suppose I have a share in the stock of a company, ABC. It is running in the economy. It is a legitimate company, well known, listed on the stock exchange if the country has a stock exchange, or legitimately traded in the market. Now, I have shares in this company, ABC company. I offer to sell you such a share. Do you think this is the same as offering to sell you 1 ton of cement? Are shares the same as real assets? Of course, we know a share is part ownership in the company. But can we say it is like any other real asset, like a fungible good, like cement, or any other fungible good, like maybe you may say wheat of a certain grade and quality? I will say, when you think about it closely, you will notice that even though shares are concrete, represent real assets, they are not like other commodities. Think of it through the following example. Now, suppose now my company sells electronic products. I sell radios and computer equipment. We have a warehouse where all the goods we sell or buy are stationed. Now, this warehouse, well defined physically, in the morning today, this warehouse has a definite quantity of items in it, goods of various types. If I propose to you that I am the full owner, I am just simplifying, I am the full owner of the company, and all the items I sell or buy are stationed in this warehouse, I offer to sell you 1 share. I want to issue 100 shares representing this whole warehouse, and I propose to sell you 1 share. This is entirely legitimate in Sharia. The warehouse is well defined. Its contents are listed. You can check and see. I offer to sell you 1 share out of 100. If I sell all the 100 shares, it means I have sold the ownership of this whole warehouse to the buyers. This is a straightforward proposition. Now, think of the fact that I am only just a hypothetical example. Suppose now I was able to sell only 50 shares out of 100. Those who bought it have ownership in that warehouse, well defined. Now for the remaining 50 shares, I found no buyer. I wanted to attract further buyers. I said, I am willing to sell these other shares at a special discounted price. The buyers of these other shares will pay me some money now, and I'll deliver the shares to them after 6 months. Now, what do you think about this? Those who bought the first 50 shares, they are buying something concrete, well defined in the warehouse. But those who are buying the remaining shares will get their shares 6 months from now. So, some people asked me, is this warehouse well secured? I said, yes, it is locked, and everything comes in and out. We register it, well defined. But please notice, this company is running daily business. Every day, some items in this warehouse are sold out, sometimes on credit or on cash. And other occasions, we buy from others for cash and on credit. So even though the warehouse this morning is well defined, what will be in that warehouse a week from now is not well defined, because we are selling and buying all the time. We are collecting debts and we're incurring debts. Then you notice the content of this warehouse, although very well defined every morning, they change from one morning to another. It means those who bought shares in this warehouse today, their shares are fully fungible. Every one share is identical to every other share in all that it represents. However, if you say, I have a share in this warehouse, and Mr. X will get a share next week in that same warehouse, his share is not fungible with yours, because your share and his share, what will it be after 1 week? We don't know. Clearly, contents of this warehouse changing daily because of the operation of the company, they are fungible, substitutable every morning between each other, but they are not substitutable across time. This is the fundamental point you have to recognize about shares of companies. They are fungible every day between themselves, but across time they represent different things. So don't be surprised if I tell you they are not like commodities in every respect. They are in certain respects, they are unlike specific real commodities. So here we come to the second point. Can we sell shares on Salam basis? You notice in Salam, you pay upfront the full cash price, and you get in return a fungible good which is expected to be available at time of delivery. It is not a good which sometime is available and in many times is not available. No, it is something expected to be available at time of delivery. The classic example, suppose you sell an agricultural product, you sell cotton of a certain grade and quality to be available for delivery at such place next November. This is a very well-defined Salam sale. Price so much, advanced now. The counter value is a certain quantity of cotton of very specified characteristics, deliverable at such and such place. This is very standard Salam contract. Here, the fungible good is the cotton. Can we sell shares for delivery in 6 months? When you think about it, even though the shares of this particular company are very well defined today, what will they represent in 6 months is not known. You see, there is quantity and there is price. In the Salam sale, as approved by Sharia, everybody knows the price is going up and down. Sharia did not consider this to be reason to prevent this sale. We know that from now until November, cotton will go up and down in price. This specific quality will go up and down. Still, Sharia permitted Salam because it serves an extremely useful social function in the economy. It helps producers finance their production. It helps traders buy guaranteed supplies available at a specific point in time, etc. It performs very useful economic functions. But shares to be delivered in November, not only the price between now and November changes, what the share represents, the real assets of the company, its obligations towards others, they are changing in quantity. So you have in future delivery of shares two aspects of change. Some, the content of what the shares represent, not only the real assets, but also the rights against others. But also the price of these assets and rights are changing also. So we must clearly see that shares to be delivered in the future are definitely not like a fungible commodity to be delivered in the future. They have fundamental difference, as I explained in the example of the warehouse.